Hello friends, I am Fevin Chatty Thomas. Today my AF1 topic is bookkeeping. What is bookkeeping? The main aim of every business is to earn profit. Profit is nothing but the axis of income over expenditure. So to calculate profit, the businessman must record the income and expenditure related to his business. This recording of business transactions is called bookkeeping. Thus, bookkeeping means recording, classifying, and summarizing business transactions systematically so that the businessman may be able to know his profit or loss during a specified period. Bookkeeping involves billing for goods sold or service provided to clients, recording received from customers, verifying and recording invoices from suppliers, paying suppliers, processing employees' pay and the related governmental reports, monitoring individual accounts receivable, recording depreciation and other adjusting entries, providing financial reports. Examples of bookkeeping. Types of bookkeeping: single entry system and double entry system. Single entry system. A single entry bookkeeping system is a method of bookkeeping relying on a one-sided accounting entry to maintain financial information. Single entry bookkeeping system is commonly used for small business with very little or minimal transactions. It is often referred to as simple, practical, and informal way of recording. Usually, it only maintains a record of cash disbursement, cash receipts, sales, and purchases. All the rest of the accounting records, such as inventory, equipment, capital, and etc., are only recorded in form of memorandum and or notes. Double entry system. A double entry bookkeeping is a set of rules for recording financial information in a financial accounting system in which every transaction or event changes at least two different nominal ledger accounts. Double entry bookkeeping in accounting is a system of bookkeeping so named because every entry to an account records a corresponding and opposite entry to a different account. Book includes journal, cash book, purchase book, sales book, purchase returns book, sales returns book, bills receivable book, bills payable book. Journal. When a small business make a financial transaction, they make a journal entry in their accounting journal in order to record that transaction. The transaction is recorded in the general journal or one of the special journals for the most active accounts. Journal entries are an integral part of accounting process for a small business. Without them, you have no cohesive record of your day-to-day financial transaction. You can't follow the money, you can't satisfy the tax authorized. You won't know your cash flow or Profit daily journal entries are some of the most important financial records you have. Cash book, a financial journal that contains all cash receipts and payments, including bank deposits and withdrawals. Entries in the cash book are then posted into general ledger. The cash book is periodically uh, recycled with the bank statement as an internal method of auditing. Purchase book. The purchase day book records all invoices it receives under the following headlines: date, supplier, purchase ledger folio, reference to the page number of purchase ledger in a manual system, total amount invoiced, purchases, analysis of purchases, example telephone, electricity. The invoice number is not recorded because this is a record of other people invoices which will have all different numbers. Sales book. This is the book of prime entry of credit sales where all credit sales of day are listed and totaled. The total is then used as single posting entry to sales ledger and also posted to a sales control account in a single total to tally with the underlying sales ledger. However, individual debits are posted separately in the respective sales ledger or debitors or receivables ledger and accounts. Purchase returns book. This records goods which the business sends back to its suppliers. The business might also receive cash refunds in the meantime. A debit note might be issued to the supplier. Headlines for purchases returns book would be date, supplier, goods, purchase, ledger folio, amount. Sales returns book. When goods are returned for whatever reason, this is recorded in the sales book. Its headlines might be date, customer, goods return, ledger folio, amount. Bills receivable book. Bills receivable book is used to record bill accepted by us. When a bill drawn by our creditor accepted particulars of the same are recorded in this book. Posting. In the ledger, the account of each person whose bill has been accepted is debited with amount of bill. The monthly total of the bill accepted is credited to the bills payable account ledger. Bills payable book. Bills receivable book is used to record the bills received from debitors. When a bill is received, details of it are recorded in the book. Bills receivable book. Posting. In the ledger, the account of the person from whom each bill is received is credited with the amount of that bill and periodical total of the book is posted to the debit of bills receivable account. Ledgers. The book which contains accounts is known as the ledger as called the principal book. Ledger provides necessary information regarding various accounts. Personal accounts in the ledger show how much money firm owes to the creditors and the amount it can recover from its debtors. The real account shows the value of properties and also the value of stock. Nominal accounts reflect the sources of income and also the amount spent on various items. The financial position of the business concern can be ascertained easily at any time with the help of ledger. Trial balance. After posting the accounts in the ledger, a statement is prepared to show separately the debit and credit balance. Such as statement is known as trial balance. There are mainly two methods of preparing trial balance. The totals method. In this method, the totals of each side of the account is entered to uh, debtor and creditor column of the trial balance. The balance method. In this method, only the debtor or creditor balances are entered in two columns. Thank you.